of the staff, management, or ownership of this station.
It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today. Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Welcome to the show. Welcome to the show, Jason Bible, Right Path Real Estate. It's Friday. We're not interviewing an investor today. I'm just going to talk to you guys about a couple of things and Tom and I have talked about the last couple of days and we thought would make great topics on the radio show. If you've got real estate questions about finding, funding, marketing for deals, real estate deals in particular, 713-785-1817. So Tom and I were chatting yesterday, and if you're following any of the stuff that's going on with regards to the national debt. So this is the debt. We're not going to get deep into fiscal policy, but I do want to talk a little bit about the debt, the national debt. One of the things I find fascinating is our national debt was about $9 trillion before Bush took office. By the time Obama leaves in January, it'll be about $20 trillion. So we were having this discussion in my office, and hey, what could we buy with $20 trillion? And not what could we buy, could we buy fancy cars, that sort of thing. How many companies could we buy for $20 trillion bucks? Which is an interesting question. So I'm going to leave this out there for folks. You're welcome to put it in the Facebook page. Guess how many companies you could buy on the Fortune 500 list for $20 trillion. So instead of investing that, if you will, in the public good here in the United States, what if we were to take that $20 trillion of debt and buy companies on the Fortune 500 list? How many companies could we buy on the Fortune 500? So that's one question. Then I had an interesting question from somebody. We were just chatting, just two guys hanging out, talking about, buying real estate and investing and that sort of thing. And one of the fascinating questions was, what happens when you run out of stocks? And I thought, well, that doesn't really happen per se. But he said, what happens if you run out of stocks, mutual funds, index funds? What if you run out of those things to buy? And I thought, that's a really interesting question. Now, technically, do you run out of stocks to buy? Technically, you don't. Those assets are, as long as they're traded, there's value to them, which is kind of an interesting discussion all of its own. As long as they're traded, as long as those companies, it's interesting, when you look at financial instruments in general, they're all nothing more than derivatives. So when people say like, oh my gosh, the derivatives market's so crazy, people shouldn't be allowed to invest in derivatives. And of course, the funniest thing, when you hear that I immediately think, well, a stock just derives its asset, derives its value, its asset value from the company. And that's technically a definition of a derivative. It derives its value from that underlying asset, which is some sort of company. So the question is, what happens when we run out of stocks? And I thought, well, that's kind of a goofy way to ask that question. What you're really asking is, what happens if we run out of companies to invest in? I thought that's probably a better way to phrase the question for the radio show. So I was running around the web. One of my favorite websites is Zero Hedge. And a couple of guys posted a link to Dark Bid. And there's this great article on here about the Wilshire 5000. And the Wilshire 5000 is an index fund. Now, what's important to know about index funds, and again, I'm not a financial guru. I mean, I'm just some guy on the radio. I don't know anything about this, so take this stuff with a grain of salt. But reading through this article here, the Wilshire 5000 was created in 1974. It started out with an index of 5,000 funds. Now, what's important to note is that Warren Buffett is one of these guys that pushes index funds. In fact, before I got into real estate, that's actually what my wife and I invested in and what she is invested in now. So index funds do make a lot of sense for the small investor. You get an exposure to a significant portion of the market or in an industry or a trading strategy, an investment strategy. So it does make a lot of sense. And it's able to reduce your risk to a certain extent. So the Wilshire 5000 had 5,000 stocks in it that represented nearly the entire stock market. As new companies went public, the index expanded over the years, reaching a peak of 7,500 stocks in July of 1998. Since then, the number of companies have been cut in half to about 3,600 as of March 2016. The last time the Wilshire 5000 actually contained 5,000 or more companies was December 2005. So it's been 11 years since the Wilshire 5000 was actually able to hold 5,000 investable stocks, investable companies. So what's the problem? One is, and there in this article, this is what it says, Ben Carlson of the Common Sense blog calls it the shrinkage effect and blames it on a lackluster IPO market, meaning that's how new companies get listed on these markets, right? They go through an IPO, an initial public offering. Between 1980 and 2000, there was an average of more than 300 companies a year that went public. Now they average about 150 a year. So what happens? You have some companies that get delisted on the market. Maybe they're not worth as much as they were, so they're no longer available for purchase. They're not investment grade. You get some companies that merge or acquire other companies. So really, the stock market is shrinking to a certain extent. What's amazing is when you look at, and again, the reason you buy stocks, the reason you buy bonds, the reason you buy mutual funds, all of these investable grade securities is for some sort of return on your investment. I mean, principally, you want a return of your investment, meaning if I invest my money in something, at least I get that money back. But second, you want to be able to invest your money in something and make some money, right? I mean, that's what this, in fact, if you listen to this radio station, 11:10 a.m., that's what it's all about, right? I mean, we want to put our money to work. We want to put our money and time to work in creating a business. So the expectation is you lend someone your dollars, whether in a traditional lending debt-financed environment or you lend it to them in an equity position, you want to make sure that you get some dollars back. So the question is, at least according to the Wilshire 5000 index, how come they have not been able to sustain 5,000 stocks in their index for the last 11 years? There's a great study that Deloitte did a couple of years ago. And they called, after they created this study, they created something called the Shift Index. The Shift Index. It compiles the ROI of 20,000 U.S. firms from 1965 to 2009. In other words, what is the return on investment that these companies are providing to their invested capital partners, whether that's debt financing, whether that's equity financing? Folks that are lending money to invest in these companies, what kind of ROI have they received over the last 50 years? And it's an excellent chart. You can see here in 1965, average rates of return were about 6.2, 6.5%.
2 minutes.
And the last time the study was done, which was in 2009, it was about 1.3%. Meaning that of the 20,000 U.S. firms Deloitte studied from 1959 to 2009, the ROI of those firms collectively collapsed by 80%. I want you to think about that for a minute. Between 1965 and 2009, 20,000 U.S. firms, their ROI has shrunk by 80%. So the question is, where do you put your dollars?
1 minute.
Now we're going into a zero interest rate environment, which just about any economist will tell you produces what we call malinvestment. In other words, the money is so cheap, they'll invest it in all kinds of stuff looking for yield. And I think that is exactly what's happening. What happens when you run out of stocks, mutual funds, those sorts of investable securities? What happens when you run out of enough of those that are at an investment grade? If you look a generic indicator of the value of let's say an equity, a stock of some sort, is what they call price to earnings. How much is it worth versus how much earnings did the company produce? And price to earnings ratio are, if they're not at an all-time high, they got to be pretty close. So does that mean they're expensive relative to other assets? Possibly. But they're beginning to lose value because no one has any other places to put their money. When we get back from the break, we're going to talk about this and what you can buy for $20 trillion. This is Jason Bible, Right Path Real Estate.
Mic's off.
All right. Let's see if I can share this. Do you want to learn how to buy 200 houses in less than 3 years? Well, folks, we've done it. This is Jason Bible of Right Path Real Estate. We've got a weekend retreat coming up October 28th, 29th, and 30th here in Houston, Texas at Memorial City Center. We're teaching our students how to find, fund, and market for real estate deals. So if you want to learn how to do 200 houses like we have, come to that event. Go to rightpathrealestate.com or give us a call, 281-888-9555 to sign up for our weekend retreat.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. We manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 5 years, Fast Track has completed over 500 projects, which has helped us create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or on the web at fasttrackremodeling.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com. Investor loans offering up to 100% financing are still available. You just have to know where to look. Look no further than Noble Mortgage. Noble Mortgage is a full-service mortgage company that's been helping investors since 2003. Noble Mortgage offers up to 100% financing to investors that covers purchase, repairs, and closing costs. In addition to private money, Noble Mortgage offers conventional loans, FHA, and even no-income documentation loans for both residential and commercial properties. Call and ask about our 5-point guarantee, which includes free pre-qualifications within 2 business days. Call 713-680-8100 or visit noblemoney.com. That's noblemoney.com. Our team has over 50 years experience in the mortgage industry. Call us today, 713-680-8100, or visit us on the web, noblemoney.com, noblemoney.com.
NMLS 292143, 8203 Willow Place Drive, Houston, Texas, 77070.
You're invited to St. Catherine Drexel Church Bazaar, Sunday, October 16th from 11 a.m. to 6 p.m. at the Knights of Columbus Hall, 22892 Mac Washington Lane in Hempstead. Barbecue dinner served from 11 a.m. to 1 p.m. Live auction 1 to 6. There's a raffle drawing following the live auction and several games and food booths, plus a silent auction. Come out and support St. Catherine's so they can burn the note. For more information, go to skdcc.com or call 979-826-2275.
Even though I had 12 years
30
of
seconds.
experience as a successful sales professional, I was looking for a more rewarding career where I could make a difference in my clients' lives and in mine.
People change careers midway through life for many reasons, but finding a rewarding career that offers flexibility and meaning can be challenging. At Edward Jones, we provide the training and support you'll need to become a successful financial advisor. Visit careers.edwardjones.com/Houston today to make your next move.
This is Business 1110.
All right, Jay. Mics in 5, 4, 3, 2, 1.
Welcome back. Welcome back. It's Jason Bible, Right Path Real Estate. If you want to give us a call, 713-785-1817. Tom and I were chatting this week, and I got 2 questions. One was, what would you buy with $20 trillion? That'll be the debt that the United States has at the end of Barack Obama's tenure. He had at about $9 trillion of that, so that'll be the the balance, if you will, the principal balance by January when he leaves office. The second question I got is, what happens when you run out of stocks? Now, technically, you don't really run out of stocks. You just run out of ones that are of any real value. And I've been reading this great article from the guys over at Dark Bid. And this is what they say about a study that Deloitte has done, and I think it's excellent to show you the depleting, diminishing value of most American corporations. American corporations have been playing a musical chairs game where the loser gets taken out back and shot. During the last 40 years, the life expectancy of firms in the Fortune 500 has declined from 75 years to less than 15 years. In what Forbes called the most important business study ever, Deloitte released the Shift Index, which compiles the ROI of 20,000 U.S. firms from 1965 to 2009. The chart shows an 80% collapse in the average ROI of American business. With negative interest rates around the corner, how long will it be until the Fed props up the zombie economy and pushes the average profit margins below the zero bound? It's amazing. With unlimited amounts of capital at near 0% interest rates, and margins have absolutely collapsed. The problem is that's what your stocks, bonds, mutual funds are all invested in, whether it's an equity position or a debt position. That's what they're invested in. They're invested in these companies. And over the last 65 years or so, 50, 60 years, we've seen their ROI, the amount of profit, the amount of return on investment they create, plummet 80%. And it's funny, when you look at this chart here, I mean, it's not like a traditional chart where you see, we have some highs and some lows and some highs and some lows. I mean, the trend line is straight to the basement. So you combine that issue with healthcare. So I used to work in the healthcare field, and I remember reading through Obamacare. I didn't read through the whole thing because if you've ever actually seen the Affordable Care Act, it's ridiculous. It may be 10,000 pages. It is huge. But I remember reading through that and thinking, what is this really going to cost at the end of the day? And what's the impact to our aging population? And when you begin to read all the studies, talk to different experts in the field, they'll tell you that healthcare costs alone are going to increase by about 7% a year. 7%. And they tell you that the rate of inflation is 2%. Like, I don't know where you get that number from, but it's about 7%. It is amazing when you start to break these things down where you're going to put your money to invest. I mean, you look at everyone is chasing after a Facebook, a Twitter. It just, where investors are putting their money right now is incredible. We're seeing a capital flight from Europe, in particular, from China. If you look at what's going on in the Canadian real estate market and how that collapsed when they essentially shut off all of the foreign investment from Canada or going into Canada, it just imploded their real estate market. Adding to that fact, oil had decreased in value over the last 18 to 24 months. Their market has completely imploded. So what happens when everyone stops chasing after these limited amount of stocks that actually have real value? What happens when an aging population's healthcare costs begin to continue to increase, but they're not getting a high enough return on their investments to pay for those healthcare costs? I can tell you exactly what happens. People start liquidating portions of their portfolio. They're called redemptions. So they start redeeming their stocks and bonds and all those sorts of things for cash so they can pay for expenses. It's kind of like that whole story, the goose that lays the golden eggs. They're laying golden eggs, and then the eggs are actually getting smaller because the yields are getting smaller. The returns are getting smaller. And then maybe they go from like gold to silver. So now the eggs are silver, and then the eggs go from silver to like bronze or maybe copper. If you guys have seen what happened to copper in the last week or so. And the eggs get smaller and smaller and smaller, and then what happens? Eventually they got to slay the goose to eat. Well, what's the value of the goose when it's gone? What's the value of a lot of these things if they're not traded? I think that's a real question you have to ask yourself. And I'll tell you, it's a real conversation we have with a lot of individuals at or near retirement. They're scared of what's going on in the stock market. They're scared what the federal government is doing. Let's go back and talk about the debt. So the debt's doubled since the current administration has come into office. And we can debate why that's happened and why it hasn't, and you're on the red team and I'm on the blue team and you're wrong and my guy's right. None of that crap really matters at the end of the day. It really doesn't. All that matters is where you're investing your dollars and are you getting a return that you need to be able to support your family. That's all that really matters. We can go back and forth about who's worse and who's not as worse and who's less evil, and at the end of the day, it doesn't really matter. Although I have this theory that I swear the middle class is trying to kill itself, but that's probably a topic for another show. So what can you do with $20 trillion? How many companies on the Fortune 500 can you buy for 20 trillion? So Tom and I were having this philosophical discussion in my office yesterday, and I was like, you know what? I bet Fortune has a list of these companies and their market cap whenever they would have done the actual study. So sure enough, pulled it up here on the old internets. Says this year's Fortune 500 marks the 62nd running of the list. In total, the Fortune 500 companies represent 2/3 of the U.S. GDP. I want to say that again so everybody gets it. The Fortune 500 companies represent 2/3 2/3 of U.S. GDP. 2/3. With $12 trillion in revenue, $840 billion in profits, and $17 trillion in market value. And they employ 28 million people. I want this to sink in for a minute. I know we don't have this problem on this with our listeners or the folks who listen to this radio station, but there seems to be a war on wealth lately, and it started about 12 years ago. I don't know when it became in vogue to be lazy. Let's just be honest what it is, to be lazy and not go out there and kind of chase that American dream. But there are about 300 million people in the United States. And right here on the Fortune 500 website, it says 28 million people are responsible for 2/3 of the U.S. GDP. I want that to sink in for a minute. Less than 10% of our population. Now, I realize not everybody's of working age. Some people are retired. I get that. Less than 10% of the citizens of the United States represent 2/3 of the U.S. GDP.
2 minutes.
That's a pretty remarkable number. Let's go back to our number here. $20 trillion in debt, 9 of which has accrued in the last 8 years. If the U.S. were just to decide, instead of spending that $20 trillion on ridiculous stuff, let's go spend $20 trillion and buy all of the companies on the Fortune 500. For $20 trillion, you could effectively buy 2/3 of the U.S. GDP. So then you got to ask yourself, how efficient is that federal government putting $20 trillion to work in the public sector? It's not. $20 trillion, actually $17 trillion with $3 trillion left over in reserves. You could save $3 trillion and, I guess go buy a really nice house with that and maybe, a couple of nice cars. And with the $17 trillion you had left over, you could buy all of the Fortune 500. By the way, if you take their profits of about $1 trillion into about $17 trillion, their yield's about 6%. So if you bought it for $20 trillion, you'd make about $1 trillion bucks. It's about 6%. I think it's about $840 billion into $17 trillion, about 6 or 7%. One of the things you have to be very aware of, especially folks that are a little bit younger, my age and younger, is that we're investing in a lot of this stuff. And you've got to decide now whether you want to be a part of this or not. We get back from break, we're going to talk more about real estate investing. It's Jason Bible, Right Path Real Estate.
Mike's off.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes, private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497. From Conroe to Galveston, Orange to Flatonia, and all points in between, Texas General Insurance Agency is trusted by individuals and businesses across the great state of Texas. Whether you're searching for the best auto insurance in Fort Bend, a flood policy for a Galveston Beach property, or coverage for your rental and investment homes in Houston, Texas General Insurance Agency understands your unique needs. Throughout the Lone Star State, their experienced and trusted independent agents offer guidance to clients on the risk-based needs associated with auto and home, investment properties, commercial, and farm and ranch coverage. Their commitment to quality and service allows them to compare multiple markets, coverage, and price to give you the best possible value. Texas General Insurance Agency appreciates the opportunity to learn how they can work for you. Call one of their experienced agents today at 713-622-5977. That's 713-622-5977. Or go to texasgeneralinsurance.com.
There is no current Republican incumbent in the 125th District Court. Change that by supporting Sharon Hemphill, an experienced, diligent Republican attorney, having represented more than 380 litigants in the Harris County District Courts alone. The Conservative Review stated that as a candidate for judge of the 125th District Court, Sharon Hemphill is overwhelmingly qualified.
35 seconds.
Sharon's commitment to conservative and constitutional principles, where each lawyer and each litigant is treated with respect and dignity, make her stand out. She's a conservative Republican who supports fiscal responsibility and smaller government. Get to know Sharon Hemphill at SharonHemphillForJudge.com. That's Sharon Hemphill, the number 4, judge.com. Political advertising paid for by the Campaign for Sharon Hemphill in compliance with the voluntary limits of the Judicial Campaign Fairness Act.
This is Business 1110.
RJ, hot mics in 5, 4, 3, 2, 1.
Welcome back. Jason Bible, Right Path Real Estate. If you got real estate questions, you can find us on Facebook. Or you can call the show, 713-785-1817. We're talking about what you could do with $20 trillion. You can go buy the entire Fortune 500 and have $3 trillion left over, for date night with your spouse, a little child care. Maybe buy a house with $3 trillion or like 1,000 houses. And then we talked a little about what do you do when you run out of stocks? And really, it's kind of a silly question, but it's thought-provoking in that there comes a point when there are so few U.S. companies that are worth investing in. I listened to the guys that come on the show before mine, and I really enjoyed. He's a very bright guy, and it's interesting when I hear people talk about investing in emerging markets. When I was in business school, one of the papers I went and hunted up was the original report that was written, and I believe it was actually by an analyst over at Goldman, about BRIC countries, Brazil, Russia, India, and China. So the idea was that, it's fascinating, it's kind of fascinating when you hear the term BRIC, B-R-I-C, and then you look at the financial media and how they spin all of that, why it's the next great investment, and all that sort of stuff. But when you read the original analysis on these things, it was the idea was that these countries were going to produce these great companies that were going to produce all this value. We're talking double-digit returns, in some cases triple-digit returns. And it was all predicated on the idea of population dividend. What that means is there's a whole lot of people of a certain age that are transacting in commerce that then provides value to that marketplace. In other words, if you look at where America is now, a lot of that value was created after World War II. So the idea is that, America like exploded after World War II. We had this population explosion. That's where we get the baby boomers from. So obviously, if that happens in another country, they're totally going to be as rich as America, which is absolutely patently absurd. In most of those countries, you can't even establish a clear chain of title for a piece of real estate. So if you can't establish a clear chain of title for a piece of real estate, how are you going to establish a business? I mean, I get it. There's e-commerce and the whole online thing is this huge thing. But the reality is you still have to have a place to manufacture goods. You still have to have a place that houses services. I mean, real estate's an incredibly important component to business. In fact, it's one of the four components required to start a business. So the idea that these BRIC countries were going to be the next greatest thing is just crazy. It doesn't make any sense. I mean, you can't even establish a clear chain of title in a piece of real estate. So that automatically hinders business creation. And now if you look at what's going on here in the United States, the IPOs that we've had issued over the last couple of years, half as many as years prior. Part of that actually has to do with the regulatory environment, some of the things that have changed since 2008. Some of them have changed because of the regulatory environment with regards to healthcare and taxes and, how do you build a new facility if we don't know what the new EPA regs are? I mean, there's all these sorts of things that a lot of entrepreneurs sit back and say, well, we're just not going to do it. There's a really great movie, if you haven't seen it, and it's called Mitt. And it's a Netflix documentary where they follow Mitt Romney through both of the elections, failed elections that he had gone through. And there's a really interesting discussion in there between him and an advisor. And they're talking about the guy that had started Papa John's. And he was relaying a story that him and Mitt were talking about starting a business. And they both agreed that they don't know how they would be able to start a business in this environment. I mean, things have changed so much from a regulatory standpoint that it is incredibly difficult to start and succeed at business. I'll tell you an even better example. This whole $15 minimum wage stuff, I mean, if that comes to fruition, there are going to be a ton of layoffs. The reality is there's going to be a lot of people that get turned into contractors if they can do that. I mean, we're not talking about a really sophisticated labor pool at that price point. But all of these changes have a substantial impact on your business. It has a substantial impact on those businesses in the Fortune 500. And if you go back to that Deloitte study I referenced in the very beginning of the show, we have 20,000 firms from 1965 to 2009 whose ROI has collapsed. And that's probably not even a strong enough word, has collapsed 80%. And here you are sitting down with your financial advisor. You say, hey, what do I do? And they say, go invest in those companies. Well, I mean, the last 50, 60 years, those companies' ROI has collapsed by 80%. Why would I go and invest in that? I started one of the last segments with what I was going to do. And one of the challenges I was seeing, I turned 38. I'll turn 39 this February. So in a couple months here. And I can already see the writing on the wall that the retirement options available to me are significantly diminished compared to where my parents are in one generation. And of course, with the, if you're catching up on any of the stuff going on in politics right now, in particular Hillary's emails, I mean, it ain't going to get any better. Probably is a better way to put it. So you've got to start thinking about retirement. I mean, to be honest with you guys, you need to start thinking about retirement if you're listening in your 20s. The CPA and attorney we use for our corporate docs, and he does all of our taxes and accounting for all of our LLCs. One of the things he tells all of his clients, even if they're not in real estate, is just buy one rental house a year. Just buy one. You don't have to set the world on fire and build this huge portfolio. Just buy one little rental property a year. I've had an idea on how to brand this whole idea of just buying one house. Just buy one house a year. Just slowly buy one house. You'll enjoy all the tax benefits from that. You'll enjoy some cash flow. The tenant will be paying off your mortgage. So depending on how you structure the mortgage, a 15-year note or 30-year note, you'll have that property paid off or a substantial portion of it paid off. The nice thing is as you're buying one house a year and they're rented out and they're cash flowing, you can pick when you sell that house. So if the market just tumbles and falls all apart, you can buy some more houses, and then you can wait until that market comes back, and then you sell them. I mean, just a real easy. I realize on our show we talk about scaling a business and building a business big, and retiring in a handful of years. Heck, if you're on top of it, you could retire in a year doing what we're doing. You could retire in a year easy. Of course, that also depends on how much retirement income you want. I have a lot of folks that I chat with, and they need $20,000, $25,000, $30,000 in passive income a month to retire. That's a little bit different challenge than if you need $4,000, $5,000, $6,000, maybe $10,000 to retire a month. So the idea is that you just buy one little house a year. And I'll tell you one thing that's fascinating to me is that, and I kind of hinted at this earlier, there are times that I think the middle class is deliberately trying to kill itself. I mean, some of these regs some of these candidates they're promoting. In fact, I can tell you, we see it in the state of Texas. If y'all are familiar with the success the state of Texas has had the last 30 years and how many folks have moved from less business-friendly states and moved to Texas to enjoy the economic opportunity we have here.
2 minutes.
But have brought all of their politics and all the nonsense here, and they still haven't caught on that there's a reason why those things are not successful in those other markets. There's a reason those states are not as successful as they used to be. There's a reason companies are moving out of those states. And eventually it'll happen here. I mean, we'll get enough people that the political environment will change, and then everybody will wonder, well, how come, our companies aren't as successful as they used to be? I mean, where did all the opportunity go? So if you're somebody like me who wants to opt out of that nonsense, I'll tell you the best way to do it is just start picking up small little single-family deals. You don't have to set the world on fire. Just buy one a year. One little house a year. Can you buy more than that? Absolutely. Can you decide after a couple houses that you want to do this full time and you want to buy 10, 15, 20 houses? You bet.
1 minute.
But if you're thinking that investing in some company or having your company take care of your retirement, or that the federal government is going to be able to do it, I'll tell you, they ain't got any money. They have no money. It's not going to happen. You're going to be standing in that bread line just like all these other retirees, and it's not going to happen. It just will not work. You're going to have to take control of your own retirement. You're going to have to take control of how much money you make today. And the only way to do that is if you're in control of your entire destiny. I'd love to tell you, like Jim Rohn does, or like Tony Robbins, that, oh yeah, anybody can be anything and you can be this, super successful person. Reality is most people don't want to do it because it requires a lot of work. But I'll tell you, the alternative is even more risky. Not doing it is even more risky. We get back from the break, we'll talk more about investing in real estate. This is Jason Bible, Right Path Real Estate.
Mic's off.
Join a group of hardworking investors willing to share their knowledge and experience with others. We're not just another guru-driven club. We're a community of Houston's most successful real estate investors. Discover more at richradio.org. The Realty Investment Club of Houston, the Rich Club, has taught more real estate investors than any other program in the state. Join the Rich Club and become part of the most informed community in Houston. Quickly discover your investment options. Receive the information you need to get started. Learn what it takes to avoid the pitfalls of real estate investment. You have questions? We have answers. If you're considering investments in Houston's real estate, then richradio.org is the quickest way to join the community and learn how to make money in today's market. Learn more about the education and community at richradio.org. Join our community to learn what it takes to make money in Houston. Visit richradio.org. That's RICH radio.org.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip rehab or a rental rehab. We manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 5 years, Fast Track has completed over 500 projects, which has helped us create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or on the web at fasttrackremodeling.com.
If you're drowning in IRS debt and can't afford to pay, then you need to take advantage of special IRS tax programs that are available and free yourself from IRS collection efforts once and for all. Due to the financial hardship consumers are facing during the decline in the U.S. economy, the Internal Revenue Service has made it easier to settle delinquent tax problems. An open phone line has been established by Community Tax for consumers to call and see if they qualify. Take down this number or store it in your cell phone, but call the Community Tax Helpline at 800-273-0135.
30 seconds.
If you owe back taxes to the IRS and cannot afford to pay them back, or even if you have years of unfiled tax returns, there's no need to fear anymore. But you have to call the Community Tax Helpline today at 800-273-0135 for the help that you need. Don't take on the IRS alone. They can attack your wages, savings, pension, home, and even your Social Security check. Call 800-273-0135 for your free consultation and to see if you qualify. That's 800-273-0135.
Uh-oh, that's not good. Did we just lose the feed? Hey, Nikki, there? Nikki? Says I'm connected. Hello, anybody there? No, we are completely dead. That's awesome. Oh. Well, at least it's Friday. Huh. Well, guys, looks like we got cut off from the radio. Facebook feed and everything's running just fine, so it must be something at the radio station. Well, that was strange. Huh. All right, guys. So I guess that's a show for today. I don't know what happened. Radio just kind of cut us off. So we will get to the bottom of that. I will see you guys bright-eyed, bushy-tailed Monday. And for everybody going to bike around the bay this weekend, I'll see you there. We're going to do the 100-mile, I think, on Saturday, and then we'll do the 75-mile on Sunday. So, all right, I'll see you guys then. Thanks for listening.